Every year, millions of Americans receive a lump sum from the government, their tax refund. It's not a bonus or a gift, just your own money, returned after a year of paycheck withholdings. For many, this is the largest cash infusion they'll see all year, and it feels like a windfall. Because it arrives all at once, it's psychologically separated from regular income, making it feel like extra money. This perception changes how we use it. Suddenly, it's an opportunity to do something different. Pay down debt, make a big purchase, or invest for the future. For some, it's a lifeline to catch up on bills. For others, a stepping stone toward a major goal. The decision of what to do with this money is a moment of financial reckoning. It's less about tax law and more about human behavior, how we treat money that feels unexpected. Even though we know it's our own cash, the joy of receiving it is real. This annual ritual transforms a simple accounting correction into a powerful economic force. The collective choices made with these refunds ripple far beyond individual bank accounts. Each spring, millions of Americans face the same question. What will I do with my refund? The answer shapes not just personal finances, but the broader economy. And as we'll see, it can even move the stock market. Zooming out, tax refunds aren't just personal, they're a massive economic event. The IRS issues over 100 million refunds each year, totaling hundreds of billions of dollars. That's more than the GDP of many countries, flowing straight to everyday people. This annual cash flood acts as a built-in economic stimulus. When refunds hit, consumer spending surges. Retailers, restaurants, and service industries all get a boost. Economists and businesses track this seasonal rhythm, knowing it drives a reliable uptick in activity from February through April. While one person's refund may seem small, multiplied by millions, it becomes a force that can move markets. The money arrives in waves, sustaining heightened economic activity for months. This phenomenon proves that the economy is powered by the collective behavior of individuals, not just big corporations. Some refunds pay down debt, others fund vacations or new furniture. Increasingly, a significant portion flows into the stock market, creating ripples that reach Wall Street. The choices of millions with their refunds shape economic data and market trends. It's a reminder. The real power in the economy lies with everyday people. Financial analysts watch for patterns that move markets, and tax refunds are a big one. Deutsche Bank recently forecasted that this year, individual investors could pour about $11 billion of their refunds into U.S. stocks. This estimate comes from survey data. About 14% of refund recipients plan to invest at least some of their windfall. While $11 billion is small compared to the entire stock market, it's concentrated over a short period and often targets popular stocks. This focused buying can create real momentum in certain sectors or companies. The forecast highlights how Main Street's decisions now directly impact Wall Street. The collective action of millions, each investing a few $1,000s, adds up to a current that analysts can't ignore. It's a reminder that the stock market isn't just shaped by institutions, it's also moved by the choices of everyday people. Each tax season, this connection between personal finance and the market grows stronger. The $11 billion question isn't just about numbers, it's about the power of collective action. What you do with your refund matters more than you think. And this year, Wall Street is watching. Why invest your tax refund instead of spending it? For many, it's a mindset shift. The refund becomes opportunity money, a chance to build a future, not just enjoy the present. Investing is now more accessible than ever, thanks to commission-free apps and fractional shares. A tax refund is the perfect starter capital, letting you invest without squeezing your monthly budget. There's also a growing desire for financial independence. People want to build wealth, not just get by. Stories of compound growth inspire many to put their refund to work for the long term. Psychologically, investing found money feels less risky than investing your paycheck. If the market dips, the loss stings less. It was extra money anyway. This mental accounting helps people overcome the fear of investing and take that first step. For many, the refund is the seed of a new financial future. One person investing a $2,000 refund may not move the market, but millions acting together can. When thousands buy shares in the same companies with their refunds, demand surges. Popular tech and consumer brands often see the biggest impact, as these are favorites among retail investors. 10,000 people investing $1,000 each in a single stock means $10 million in new demand, enough to move prices, especially for smaller companies. This effect isn't limited to individual stocks. Entire sectors can rise if enough people invest in them at once. Optimism about trends like electric vehicles or AI can lift whole industries. As prices rise, more investors jump in, fueling a self-reinforcing cycle. The catalyst isn't a big fund, but the combined choices of everyday people. The market's true power lies in numbers, not just dollars. Retail investors, acting together, create ripples that can become waves. You don't need to be a Wall Street giant to make an impact. Your investment, multiplied by millions, helps shape the market. Just as retailers anticipate holiday shopping, market watchers recognize tax refund season. The influx of refund cash, much of it now invested, creates a temporary tailwind for stocks. This seasonal boost starts in late February and lasts through April, peaking as the IRS sends out payments. The effect is most visible in popular stocks and index funds favored by new investors. Sustained buying from individuals helps support the market, absorbing selling pressure and fueling optimism. It's a real-world event, unrelated to earnings or economic data, that still moves markets. Deutsche Bank's forecast is essentially a prediction of this seasonal tide. Of course, it's not the only factor. Bad news can still overwhelm it. But in a stable market, refund investing acts as a steady supportive current. Year after year, this quiet force helps shape the market's springtime journey. When your refund arrives, you face a choice: spend or invest. Spending brings immediate satisfaction, new gadgets, a trip, or catching up on bills. There's nothing wrong with using your refund to improve your life or reduce stress. Investing, on the other hand, is about delayed gratification, buying assets that may grow in value over time. It's a vote of confidence in your future and the economy. The smartest approach is often a mix: use part of your refund for immediate needs and invest the rest. For example, pay down high-interest debt and put the remainder in a low-cost index fund. Or treat yourself modestly, while dedicating most of the money to your retirement account. The right choice depends on your situation. If you have debt or no emergency fund, address those first. Once your basics are covered, investing becomes a question of your goals and values. There's no single right answer, just the one that fits your life. The key is to make a conscious, deliberate plan. Don't let your refund disappear without a purpose. Ready to put your refund to work? Start with the basics. For beginners, low-cost index funds or ETFs offer instant diversification, owning a slice of the whole market in one step. Another smart move: contribute to a Roth IRA. Your refund can grow tax-free for decades, and withdrawals in retirement are tax-free too. Maxing out your IRA with your refund is one of the best wealth-building moves available. If you're already set for retirement, consider individual stocks, but do your homework and invest in companies you understand. Thanks to fractional shares, you can buy into even expensive stocks with just a small amount. Before investing, make sure you have an emergency fund, 3 to 6 months of expenses in a high-yield savings account. This safety net protects you from life's surprises, so you don't have to sell investments at a bad time. Using your refund to build this foundation isn't flashy, but it's essential. A solid emergency fund is the bedrock of financial security. The story of tax refunds and the stock market proves a simple truth. Small actions multiplied by millions create real change. Your decision about your refund may feel personal, but it's part of a nationwide wave. Together, these choices add up to billions flowing into the market, an invisible hand powered by everyday people. It's not just Wall Street calling the shots. It's nurses, teachers, and engineers investing in their futures. Each investment is a vote of confidence in the companies that drive our world. The stock market gathers these votes, turning them into trends and growth. Realizing this collective power can change your relationship with money. It's about ownership, not just spending. Your small stake is a piece of our shared future. As tax season unfolds, reflect on your habits and choices. Remember, you're part of a larger economic ecosystem. Your decisions, combined with millions of others, can lift the entire market. The $11 billion story is a testament to the power of collective action. It all starts with your choice.